Why do you think you break your trading rules? Yet you have them very clearly, well written in your trading plan, but yet you find yourself breaking these rules. You need to understand that you don't break your trading rules because you are careless. You break them because inside you is trying to avoid discomfort. Look at this. Every trader says, I just need more discipline. But discipline doesn't randomly disappear. There is always a reason behind it. And in this video, I'll be breaking down the real reason why you break your rules and what is more important than learning any new strategy. So this video is probably for those traders who know their rules, right? They have their rules written clearly, still break them in live markets. They feel frustrated with inconsistency, or they keep repeating the same mistakes. And what you need to understand is that you don't break the rules because you lack discipline. Like I said, you break your rules because you're trying to control emotions, right? So you need to realize there's the rule vis-a-vis the reality. And to explain this, you realize that on paper, your rules are clear. Entry criteria, risk management, exit conditions. But trading isn't done on paper. It's done in real time with uncertainty. And uncertainty creates emotional pressure. That's where rules start. So you don't randomly break your rules, but there are key triggers behind you breaking your rules. And I'll share some of them, basically the 4 common triggers that make you break your rules. Number 1 is fear of loss. You realize that most traders avoid taking valid trades, or they cut winners early. So they see a trade, but they fear to take that particular trade because maybe probably they have lost before. So they fear to lose even more. Some, they do cut winners very early because they don't want the trade to retrace and probably for them to take a loss. Okay. Number 2 trigger is fear of missing out. That is FOMO. This is whereby you find yourself, you enter too early or chase moves. So once you've marked your trades like this, as you can see in this chart, I think this is an entry, this is a level that we had marked quite sometimes when the price created this particular order block. But you can see when it's being tested. So someone could have seen maybe probably price coming to this level here, and then now they start taking the trades. This is FOMO, because you have to wait for the price to come to your point of interest if this is your point of interest, right? So don't chase moves. Number 3 reason why you break your rules is the desire to recover losses. The desire to recover losses, this basically leads to overtrading, right? Or revenge trading. Both of them, nothing comes good, because overtrading after a losing streak, it leads to more losses. Revenge trading will lead to more losses. And remember, when you trade with the desire to recover losses, you're trading from a point of emotion. So you're likely to break your rules. Higher chances that you're not going to follow even your trading plan. So what happens is that you might end up even making more losses than even thinking that you're recovering your losses. Number 4, the reason why you break your rules: overconfidence after wins. You call yourself the gods of the market. You increase your risk or ignore rules, because when you buy, the market buys. When you sell, the market sells, because you have had 5 consecutive wins and you feel you're on top of the world. So you end up violating your risk management rules. You end up increasing your lot sizes. And what happens is that that next trade that comes is likely to wipe you out. You lose even more than you can afford to lose. Sometimes you end up even blowing an account. So remember, each of those 4 behaviors: fear of loss, fear of missing out, desire to recover losses, and overconfidence after wins, is an emotional response, not a strategic decision, right? So, but as a trader, what you need is control, right? What you need is control. But there is the hidden need of control. And the hidden need of control, this is what you need to understand, that trading is uncomfortable because outcomes are uncertain, losses are inevitable, and control is limited. Okay, the control is limited. So traders, they try to regain control by moving stops, right? So they move their stop loss, they exit early, or they force trades. And these actions feel like control, but they actually reduce consistency. Okay. So remember, when you start feeling uncomfortable, this is obvious in trading. Of course, your trading actually should be boring. If your trading is exciting, then you're not trading the right way. Your trading should be boring. And therefore, but now there is the boring and there is the uncomfortability of it. So trading is uncomfortable, of course. It's also boring and it's uncomfortable. Uncomfortable because the outcomes are uncertain, losses are inevitable, control is limited. And therefore now, where the mistakes come in is when traders try to gain the control by themselves. So that's why you find traders moving the stop loss, right? You find traders exiting trades very early because they fear making losses. You find traders trying to force trades. Probably the trade does not even materialize according to their plan. They're not even trading their plan, but what they're doing is that they're trying to force the trade. They're trying to force the trade. So, and all of these actions, traders feel like they're in control. But what these actions does is that they minimize your consistency as a trader. And what you need to realize again, discipline alone cannot be able to fix all this. So telling yourself to be disciplined isn't just enough, right? So saying that you are going to be disciplined, that isn't just enough, because discipline requires a couple of things. It requires emotional stability. Discipline requires trust in your system. Discipline requires acceptance of risk. And therefore, without these three elements, discipline collapses under pressure. So you can't force discipline, you build it. Okay, you build it. And the three ingredients I talked about discipline is emotional stability, you require trust in your system, and also you need to accept risk, right? You need to accept risk. So how do you fix the rule breaking behaviors? All right, how do you fix the rule breaking behaviors? So again, I'm going to give you 4 ways that you can use basically to help you fix your rule breaking behaviors. Number one is you have to reduce your risk. So lower risk reduces emotional intensity. The moment you find yourself executing a trade and after every 2 seconds you're looking at your MetaTrader 5, then if you scrutinize well, you realize that you have used high risk, right? You have used high risk. So to ensure emotional stability, then you need to reduce your risk. And the reason why we say do not risk more than 1 to 2% of your account, right? Number two, way that you can be able to fix your rule breaking behavior is accept losses before entering, right? You know this phrase that says risk only what you can afford to lose. So if you are not okay with losing, you will interfere with your trade. So the moment you enter a trade and you're not okay with losing, you're going to definitely interfere with your trade. Either you cut losses very early, you move your stop losses, etc., etc. So you have to accept losses before entering a trade. Understand, this is a game of probability. The trade can be a winning trade, it can also be a losing trade. Number three, how to fix your rule breaking behavior is focus on process and not outcome. You need to realize that winning trades can still be bad trades. Good setups can still be bad can still be losing trades, right? And losing trades can still be good trades. So you have to focus on the process. Focus on improving yourself each and every time. Why are you journaling the trades? You're journaling the trades so that you can be able to analyze those trades and be in a position whereby you can be able to identify the mistakes you made. Remember, I shared a weekly journal, um, a weekly checklist in terms of helping you to journal, and there are a couple of questions you need to answer there. So the moment you answer those questions, one of the questions is the mistakes that you did. So you need to look at the mistakes that you did, and then now you come with some action points that will help you avoid those particular mistakes in the future. Okay, so you're focusing on improving yourself, you're focusing on the process, you're focusing on becoming better each and every day, and not the outcome. Forget about the dollar amount that you make. Forget about that. If you focus on that, that tells you anytime you make a loss, it's definitely going to affect you, because you're just looking at the profitability aspect of it. So here, focus on process and not the outcome. How to fix rule breaking behavior number 4: track behavior, not just results. So journal. And your journal, like I said, it's going to help you answer 2 questions. Did I follow my rules? What emotions was present? Why? Because you want to understand these things. Because the moment you are aware, awareness creates change. Okay, awareness creates change. And why am I sharing this? Because I used to think myself that I lacked discipline. But after scrutinizing myself, after having a couple of meetings with myself, I came to understand that what I actually lacked was emotional control and acceptance of risk. And once I addressed that, rule following became easier. So I started building now the discipline. But this discipline was as a result. This discipline is as a result, not a starting point. Okay. So what am I trying to say in this particular video? You break your rules because of fear, pressure, discomfort, need for control, not because you're careless. Therefore, what you need to do is to fix the emotions, and the behavior will follow, right? Fix the emotion and the behavior will follow. So in the next video, I'll be talking about how fear shows up before you even enter a trade. Why is that important? Because most traders, they think fear happens during the trade, but it actually starts much earlier. So until the next video, keep safe.